Now, on the flip side, we have a resistance. Could be an order block, could be a supply zone, etc. You wait until the market reaches a level and you have the accumulation of the orders pushing the market down. Stop loss orders are right here now. Remember this. Always focus on the money. You have to look at where most or the bulk of the orders are resting. So you see I have a small area right here. Of course the market was buying before, the market take the liquidity of those who are buying. That's a small amount. Then the market builds up some liquidity right here. So when it manipulates this zone and goes above like this, taking out all the orders here and enticing the breakout traders, etc., and then decides to dip back inside. What's happening now is that, let's say the market creates relative equal lows right here, and then the market decides to come back up to this level. What is happening is that all the orders to get taken out right here. You have some small amount of SL stop loss right here, but you have a huge pool right here now, because remember that same thing, the double bottom and them, the relatively equal lows. A lot of people like to put their stop loss right below them, close by. Remember, it's a beginner's thing. Trust me, I used to do it, so I know definitely, and I see a lot of people doing it up to this day. Close below, because it is a double bottom. So everybody putting it here. Plus, it's an uptrend. So people are gonna say, all right, it's an uptrend. So we can put my stop loss anywhere here. It now gonna break this. Most of the stop loss, they are down here. So where the market is going? The market is going to head here. The stop loss right here is going to be small. Unless people spot the head and shoulder from before, it's going to be bigger. After breaching this now, all this order get taken out. And you see all the people that enter right here, 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 enter right here. Remember, you know, as much as you're using this to get an entry, you have to be smart. The people that are entering here for the sales coming down is already selling. They're a bit late. It's going to add to the big stop loss that is here. And remember, the smart money follows the money. So sooner or later, the market is going to breach this. Even though we're using it for entries, it is very profitable using this, getting the distribution coming down, right? But at the end of the day, you have to think and use the back of your mind now that when it's adding to the liquidity like this, it's circumstantial. Depending on the circumstance, it will breach it. But if it's not a lot of people seeing this and entering it, then it's going to come back up, create a lower high, and then continue down. Because if people are viewing it as still an uptrend, saying that alright, it's going to continue up, then they are not going to try and sell it. They are going to continually buy it, and then that will add to the pool of stop loss down here. So it's all about where the money is, and you need to find out that before you do anything else. You have to lead with liquidity. Liquidity is the king of the market, not market structure as our retail people talk about. Liquidity, that's what moves the market, not the structure. The difference between how smart money traders think and how retail people think. Retail people think on what they are seeing. Smart money traders think about the perception of other traders and the liquidity itself, what the algorithm is doing. Now, the double bottom, of course, is this, where the market, of course, sell. Now you could get an entry right here, but I would say it's a bit more risky. It's more risky than to wait until you see the manipulation. Even though you know the market is going to create that second leg, you need to anticipate the manipulation that will take place afterwards, because there's a huge area of stop loss right there. And when the market takes all of that stop loss and breach this level, it's going to come back down. It's not even a question. After the market takes liquidity on one side, it's going for liquidity on the other. Right? It takes buy side liquidity, it takes sell side liquidity after. It takes sell side liquidity first, it takes a buy side after. Right? And this, of course, I didn't show you with the head and shoulder, but if you see the divergence on the RSI, something like this, right? Where the market creates a higher high, but on the main chart, it creates a lower high. That's also an indication you could get the entry on the second leg of the RSI, or you get it the second leg on the main chart, you know, when after the manipulation has been done. You have to also remember the quasi-mode, right? Even though I didn't show you that with the inverted head and shoulder, let me show you right now. Quasi-mode is simple, guys, and it's very important. A lot of people don't even think about it. The market creates a higher high, and the market creates a lower low. When the market come back and test this right here, it's going to sell. When we look at market structure, we know the inverted head and shoulder and the head and shoulder that's up here, But there's something that's additional that I find that occurs in the market a lot, right? You see, when the market create this, the head and shoulder right here, and the inverted head and shoulder, it does this a lot. The M's, the W's, the waves, all that happens a lot. You see, when you train your eyes to see it, it becomes clearer to you. Remember, the relatively equal lows, that's right here. That's why the market breach it, right? Also, Quasimodo, the market creates a higher high, and then the market creates a lower high. When the market comes back to test right here, it's going to sell. For the inverted head and shoulder, the market creates a lower low, then the market come even relatively equal lows, or when the market creates a higher high, breakout structure, etc. When the market comes back to test right here, it is going to buy. Right? It is going to buy a lower low, higher high. When it comes back to test here, same level line up here, it will not breach this, it will buy. It will not breach this, is the manipulation, it will then sell. So after seeing this, there's something, these kind of look, jumbled in a sense, but look at it. So the market is selling for a while, pull back, then it go and create a lower low, then it come and create a high high. Now you're thinking that this is Quasimodo, don't it? It creates a lower low, then it come and create a high high. I'm showing you when the Quasimodo fail. You see, if the market comes back to test the Quasimodo area, like right here, and it does not go and break this high and create a higher high, then it's rejected somewhere about here, it's going to sell. Alright, so look at it this way. This is something where the market could do. You see, after the market is selling for a while, it comes up, comes down. You're expecting Quasimodo because they have a lower low right here and they have a higher high right here. You're expecting upon the test of here, you will get the buy. But what if the market did not reject right here? It instead comes lower and form a lower low. What could happen is that the market, when the market comes back up, it tests right here instead, and then you get an entry for a sell, a continuation downwards. Now, this could be something that happens like on a Monday or Friday, or you didn't get an RSI divergence, signify reversal, you get an RSI convergence instead to continue the downtrend, right? So if the market did not come and test this area right here to get the Quasimodo to rise, instead it creates a lower low, or even create a relative equal lows right there, then it is going to sell. And you can even focus, you can even look at it this way. If I remove right here, you'll get this, you get a head and shoulder, right? So you have to train your eyes to see it. It's a continuation, right, of the downtrend. Over here we have an uptrend, right, where the market is buying, pulls back, buy again, and then it creates a lower low. So you have a higher high right here and you have a lower low right here. Now you're anticipating a Quasimodo, don't it? So when the market comes back and tests right here, you're expecting the sell. But instead of the market selling, the market went and created a higher high. So if the market creates a higher high like this now, you're no longer expecting a Quasimodo reversal. And worse, if you're not seeing an RSI divergence or anything like that, you should not try to get a reversal. When the market creates this high now, you're now anticipating a continuation upon the test of this level instead. So then the market continue up. And you can even, of course, train your eye to see this. Remove this side. It is as clear as the inverted head and shoulder that the market is creating. Right? Alright guys, that's it for entries and exit. With that said, catch me in the next video. Peace.